Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good. Oh my gosh, what the is my camera is broken? Are you kidding me? Hold on. Oh my gosh. Like, could things have gone any worse here? Oh, I know what's wrong. Hold on. I hate it when it does that. Hold on. Aha! There we go. Oh, and I have my life. So you know what happened this morning, guys? Was I came in and I was having a little problem with NinjaTrader yesterday, and I didn't fix it. And so I've been here this morning trying to fix it. And I know how to fix it. It's just it takes a little bit of time here, right? So I need to close this all down. And I need to come in to the documents here. Anyways, so like all my stuff on my computer is all screwed up. And like I didn't even have time to eat. What a shitty start to the FOMC day, right? Although I'm not sure, to be honest with you guys. I mean, I probably shouldn't say this because then you'd be like, oh, well, let's not watch that then. But I'm not sure I'm going to make a move on this FOMC because there's like a high degree of volatility coming into this. And it is making moves that are a surprise to me. A surprise to me, I would say. And so because of that, I think that it's better that I kind of be a little bit hands off here. So let's see here. Of course, that might change before the meeting. We'll see. Okay. Bum 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 bum. And good morning, TLA and Greg. How are you guys? Man, it's been a difficult. So the other thing that happened was Zoom got destroyed. Like I got into that thing because I thought it was over, but that was a big mistake. I mean, it's not like it doesn't hurt me that much, but I just feel a little stupid about it. You know what I mean? Like when you're in on The Big Loser, right? Okay. See if I can get my workspace to load up here correctly now. I'll just leave my face on here for a little bit while we're waiting for it to load up. The ES and ebb and flow is horrible today. I would, it hasn't been very good. But you know what? I suspect. Here's what I think is going to happen. Okay. I think that the FOMC is going to be pretty much exactly what we have planned for the last like 3 months since this was first on our radar, right? They're going to come out, they're going to say, we're going to taper. The asset purchases are going to taper going into the first quarter of next year. And then towards the end of 2022, in the later half of 2022, we might see interest rate increases, right? It's going to be the same thing. The one thing that might be different is that they will move forward the rate hike from December to June, right? But even if they come in and they move the rate hike from December to June, I think I look at that and I'm like, that seems to be the market expectation right now. Like Goldman Sachs, that's their estimate. I think that's generally what the market is pricing in right now. So like that's I suspect why the treasuries have kind of been unwinding here a little bit, because they're basically like, well, nothing extra happened. We're not going to get any more out of this. We need to take our shorts off now. That's what I think is happening. And so over here we've got equities, and maybe equities are a little scared of it, right? So that's why what I suspect happens is it comes out. The guys in ES are a little skittish right now, but then it's going to come out. It's going to be basically just as expected. And then the guys in the equities are going to be like, oh, yeah, we don't have to worry about anything anymore. And then they'll buy, because they're like, it seems like they're holding back right now. Don't you think? Okay, now we can come over to the chart because it's loaded. Okay. So here you can see in ES, we had an okay day yesterday, but it was quite limited, relatively speaking. It's at all-time highs and everything, and some of the moves up have been super crazy. So I think that an up day of that degree is good. Maybe volatility will be coming down. We get smaller range days anyways, but that's where we're at on that one. In the treasuries here, you can see, so on Monday, we had a pretty good rise, right? Tuesday, good rise overnight, and then another good rise in the morning. And here now again, a good rise overnight. And we're basically like back to where we were like on the 27th, when there was like really serious risk sentiment out there, right? It was the 27th, right? Let me come back here. Yeah, here you see on that like 27th, 28th, where the E-mini had a good dump. Okay, so that's where we're at there. Oil down overnight. Natural gas. Okay, natural gas had a rise yesterday. That's interesting. It's interesting that oil and natural gas don't follow each other quite as closely as you would think, but we got to keep an eye on that as we go into the winter, right? Gold's still struggling to looks like they bounced off that 1800 level this time. Silver took a little bit harder. Copper may be basing out. Kind of looks like it might want to try and come back up, but yeah, we'll see. And Bitcoin. So Bitcoin wasn't all that great yesterday, but Ethereum, look at Ethereum. Ethereum is taking off. And the news in Ethereum is that now they're actually burning more coins than are being created. And that's creating a supply bottleneck in Ethereum and moving it up. So I think Wall Street is still like very much in Ethereum. I think if I wanted to be, I'm still too nervous to be in the crypto ecosystem, but I think that if I wanted to be in there, I'd have to be in Ethereum, yeah? The dollar came back a little, they're still kind of tagging the 94 level. So that's basically where we're at the moment. Let's see here. Breaking market news. The 10-year note and 30-year-old bond auctions are expected to be decreased by $2 billion each, while the 20-year bond auction will be reduced by $4 billion. The Treasury has announced a quarterly refunding of $120 billion in order to raise approximately $44 billion in cash. Okay, that's Interesting. And that's why we're getting the volatility here in the treasuries here this morning. Oh, I didn't. Was I supposed to know? Oh, yeah, the treasury refunding announcement was down. Oh, no, wait. Why? That's not until 7:30. Oh, we did have ADP was 571 versus 400. So we have a situation where we expect the non-farms to be really, really good. Interesting. Well, that's just one data point. But we kind of have to start thinking about that possibility now. All right, now, because I didn't have a chance to eat, I have to eat a muffin, yeah? Oh, let's bring it back over here. All right, so I'm just gonna move this aside here for a bit. Hey, Lucas. You know, Lucas, anytime that you come, because you were one of the oldest longtime watchers, and I think, okay, Lucas is here. We need to give him some pointers on the current action and the plan and everything, because that's usually when he comes in, is when he sees something that is really confusing. But I got nothing for you today. I think that the FOMC will be nothing. U.S. Treasury grinds. Oh yeah. The grind lower though is because of the Treasury announcement, right? You see there, the U.S. Treasury has announced a quarterly refunding of $120 billion in order to raise approximately $44 billion in cash and refund $75 billion in maturing securities. They will 10-year note and the 30-year bond auctions will be expected to be decreased by $2 billion each, while the 20-year bond auction will be reduced by $4 billion. So there is going to be less issuance, I guess. I think that's why they're moving down. I'm not quite sure how that, when less auctions are going to be, less bonds are going to be put out in the auction, that pushes us down, but that's clearly the news that's moving them. Actually, that is kind of confusing. You would think that it would, well, maybe that gives us a good opportunity to reverse that move. I think that over the past 3 days that shorts have been unwinding. FOMC mornings are always tricky. They can't, I don't know. It's kind of hit or miss, isn't it? Right? Like I remember back in the day when we first started, in the heyday, when it was you and me. It was just you and me. Now, it wasn't just you and me, but there was other people, but a lot of people that aren't here anymore. You remember that it would be like, you would just get these crazy trends the first 3 meetings, 3 days before the meeting. And you're like, what's going on? Do they know something? And then the announcement would come out like in line with the way that the treasuries were going. You're like, oh, did they know? Like, did they have spies at the meeting and they're trading on it? Like, how did they, you know what I mean? But it hasn't been doing that as much lately. And then this time they have been kind of doing it. So I'm a little, but I don't know. I'm not so convinced that somebody's like placing a big bet or anything like that. Like when I look at yesterday's action, it was like the meta order that moved us up. It was like 50,000 contracts. It was 50,000 contracts net cumulative delta at least. So that's a pretty big institution doing that, which makes me suspect that it's not so much a bet. So my best guess is unwinding a short or something of that nature, or a sovereign wealth fund just kind of shuffling things around and doing stuff that they were going to do anyways, and they just want to do it before the risk of the FOMC, right? But I kind of suspect that they're unwinding it because they think that the Federal Reserve is just going to hold the course, which I think at this point, if they held the course, it would be dovish. Bed Bath & Beyond surges 58% after advancing buyback program. Oh man, their short squeeze must be going on over there finally in Bed Bath & Beyond. I should have invested in that one. That was like on my list, but then I decided against it. Wrong decision there. That would have just been kind of whether I'd gotten in it or not. Kind of would, nah. There's no way I would have gotten it because of all the craziness back then. No way. I was too late to it. If I had gotten in like the day that GameStop was going crazy, but the other ones hadn't picked up yet, maybe I could still be in it. I don't know who is doing what, but it feels like it might chop around this area. FOMC will become more and more interesting as time goes until they make a hard stance. I mean, I feel like that they are really confident about their current trajectory. Although we should acknowledge that they did kind of bow to the inflation a little bit, right? I think that's why the treasuries had been pushing down a little bit, because they were saying, well, the inflation hasn't been as transitory as we had hoped. But I don't think that changes their larger calculus that, you know, they don't want to raise rates yet. You know, because if the market thinks it's going to happen June, December, and I think right now they're really leaning towards June. The market is leaning till June. Then, you know, if we were going to bring forward expectations, then we'd have to be talking about like March, right? And how is that going to happen? There's no way that's going to happen. So I think that they're probably going to stay pat pretty good. I think they want to bluff as hard as they can in order to not have to use their tools to control inflation. There's definitely a lot of that sentiment out there, right? At least in the retail world, so many people are thinking like you are, right? That the Federal Reserve actually feels like that in order to meet their mandates, that they should be raising interest rates now, but are avoiding doing so because they don't want the rates to rise on the government. I don't adhere to that theory. So hear me out. Yeah, the Federal Reserve, they're going to come and they'll raise interest rates, right? And maybe they'll raise it like 1% cumulatively, right? Like maybe they'll do couple 25 basis point rises, like 4 of those, something like that, right? We would still have historically low rates. So I don't really think that that's a super big concern right now. I think I think what's going on instead is that there was some concerns over the Delta variant, and the Federal Reserve did not want to reduce the asset purchases while the Delta variant was going on. And it turned out that the Delta variant, even though it did have an impact, it was super small, and in retrospect doesn't seem like a big deal at all. So I think that they were being overly cautious because of that. Probably the right thing would have been to reduce asset purchases sooner, but they were doing the right thing based on the risks involved at the time, right? But now that that's passed, like, yeah, you've got to reduce asset purchases because it's really not helping. And you're going to have to, you don't want to start raising rates like right now because there's probably going to be another wave in the winter, right? These interest rates can easily run down. Yeah, because the thing is that the Federal Reserve will, like, this has kind of happened before, right? Like they start normalizing, and then they kind of have to hold back on it, right? And that's what I think is most likely to happen, is they'll start raising rates a little bit and they'll normalize them a little bit, and then they'll have to back off again. And then we will go back into the deflation is a larger risk environment again. Hopefully by that point, all of the supply chain bottlenecks are passed and we go back to, the deflationary environment. But who knows? Maybe the inflation ends up being much more persistent and that doesn't come back. That brings us back to Zoom. So I mentioned Zoom got creamed yesterday. I think it's just market impact. So like, we knew that they were having problems like a week ago. They came down, or maybe it was like a month ago. That was like a month ago. They came down, and then there was a pretty good bounce. And then the headlines started coming out again. And I feel like that some of these headlines you kind of had to have factored in already. But the news now is that they're losing several millions of dollars from the home purchases that they made, that they have determined that the models that Zillow, sorry, was I saying Zoom? We're talking about Zillow. The models that Zillow had been using, they've decided aren't good enough to do what they were doing. Now, there are other people that were doing the same thing with the same kind of data, and they didn't have the same problem. So I think that really what the case was is that their quants fucked up. Their quants fucked up, and the CEO just said, well, then we give up. when probably I still think it's a good idea. It's just, you probably should have been more cautious. You shouldn't have bought so many homes based on an untested thing, right? Yeah, Zillow, ZG, Zillow. Yeah. So yesterday it was like they're losing money on it. Today it was they're winding it down. And so I think what you're seeing in the aftermarket and what yesterday is like a lot of Wall Street was in on Zillow because of the home buying thing. And now they're not doing that anymore. Then you don't have a reason to be in it. So it could be a reason to get out here. But I would also say that I think that the core of that company, what they do, is really strong and has good growth prospects ahead of it anyways. So you think about that stock was twice as high as it is now, and that was before they started buying houses, right? So I don't know what happens today with it, but that just ties into the interest rate. That I think that what happened in Zillow was that people were just buying houses like crazy because of the low interest rate driven by the asset purchases. And it caused Zillow's model to just puke everywhere and give them way too high of an estimates. Because you're talking about like they're losing like $15,000 on every home. That's just nuts, right? Okay, News Squawk. Treasury just announced cuts to its auction sizes as expected. So maybe what's happening here is the cuts to the auction sizes were not as much as anticipated. Because that's not something that we get an estimate from people on, but surely the banks are estimating. Okay, we're about to be there in the debt cycle, so it's a matter of the timing short. Okay, I need to finish eating my muffin. I'm going to start getting like hyper hungry here if I don't. Activision. Morgan Stanley cut its rating on Activision Blizzard and they fell as much as 12% as two of its most anticipated games showed the company was unable to deliver on its pipeline while dealing with internal challenges. Good. Let's get that CEO out of there and restore a once great company. Treasury is cutting back $17 billion, exceeding Fed's expected $15 billion taper. $17 billion is how much they're cutting back, and the expected taper is $15 billion. So that's still $2 billion less that will be in the market. But they're selling it. I'm sure that when you do all of the math on this, that it's hawkish, but I'm not that sophisticated, and I wish I was. I feel left out. Okay, so now that I'm done with my... Did I take that all the way back into the thing? I'm like sitting here like, I am in a different world this morning. I don't think that I've kicked in yet. Okay, so I need to think here. 131 was a key spot yesterday. I'm gonna push down. Trying to get some context here. Okay, point of control was 131. Value area 26. So let's on some of these more technical ones. 30 in the 30 year. And 28. It was a decent move down, but I'm not so sure that I can confidently try and go with the trend here. I wish I could. Because at the moment I feel like this is going to just trend the whole time, but I don't actually have any reason to believe that that's what's going to happen. In fact, I have a couple of reasons to believe that it's going to stop around here. Are we getting... Yeah, we are. We're getting flattening. The 5-year moved down quite a bit. In fact, there was a good buy at 30.5. So that is exactly, isn't it funny? It's like the exactly the spot where I'm like, oh, it's like it's just going so hard, and then ticks back up, right? They're very good at that. Now, another interesting thing here. In the 5-year, they sold the 5-year pretty hard. They sold the 5-year pretty hard, but not so much the 10 and not really at all the 30. Which is leading to some flattening. I don't think that it's a spread trade so much as it is that they went in on the 5-year. Now, the E-mini, I haven't really been watching that too hard, but there was a hard sell there in the E-mini just a little bit ago, like 4 minutes ago. And it's a good tick up in the 10-year at 31. Are we seeing the Japanese yen move here on this? Not really. We are seeing as the 5-year rates in particular there started to rise, gold got hit pretty hard by that, and they're back to 1776. And oil is also taking a dive right now. Oil's taking a pretty hard dive. Did Bitcoins move? They did. They moved down too, but their move down was earlier. Oh, no. We're 3630. They're moving down too. Even so, all of the things are down off of that move. I'm reading Twitter here. There's lots of interesting stories out this morning, things that I should be reading, but meh. I guess we didn't talk about the governor races. Did you see that the Democrat in Virginia lost? The Democrat incumbent lost, as we kind of suspected. I think it's kind of funny because like the writing was on the wall, but then here this morning it's like shocking. But then the other thing is that like it sounds like maybe they lost New Jersey too, which is like, what? Here, let me read here. Hot air. Joe Biden won New Jersey 16 points 1 year ago. Polls had incumbent Democrat Governor Phil Murphy ahead outside of the margin of error. Challenger Jack Ciattarelli jumped out to a lead in early vote counting, but everybody knew Murphy would pull away easily when Essex and Passaic counties came in. Well, everyone was wrong, or nearly everyone, especially Democrats who doubled down on the radical over the past year. In a shocker, the contest, once seen as a shoo-in for Governor Phil Murphy, remained too close to call Wednesday. Results this morning showed the Democratic governor and Republican challenger Jack Ciattarelli, Treasury moving down there, by the way, less than 1 percentage point apart, teetering on a razor-thin margin in a race that surprised many and burst into the national spotlight. Both campaigns cleared out of their election night parties early Wednesday without declaring victory or conceding, and it's possible a winner may not be decided today. As of 7:03 a.m., so that was like 2 hours ago, Wednesday, with 98% of the precincts in, Ciattarelli was leading Murphy by about 1,200 votes. Wow. According to the totals from the Associated Press, that amounted to 49.7% for Ciattarelli and 49.6% for Murphy. But thousands of votes, especially from a Democrat-leaning areas, have yet to be counted, and it remains unclear how many vote by mail or provisional ballots must still be tallied. It kind of sounds like if it's that close and it's a Democrat area like that, and it's always the high population areas that get counted last, right? Probably the Democrat will win that, but just the fact that it is so close is a shocker. Yeah. but it's not certain. Commentators attempting to explain the inexplicable last night, both in New Jersey and Virginia, which was a lot more explicable, tried to pass this off as just a natural replay of 2009. It's true that both states have a history of flipping against newly elected presidents, but there's a big difference in both states from 12 years ago. Both of them got a lot bluer the past decade. Virginia especially so. Republicans hadn't competed successfully for statewide votes in either state for the better part of a decade before last night. On top of that, Murphy was a relatively popular incumbent, so it seemed. Democrats can excuse Virginia as being saddled with a terrible candidate in Terry McAuliffe, but that wasn't the case in New Jersey. That is interesting. Yeah, because I definitely think that the reason that Terry in Virginia did so bad was because he kept sticking his foot in his mouth. I'm really surprised vote by mail is an actual thing. I am too. You know what though? It's so awful. I have to say, this is what bothers me so much about this sort of a thing. Okay, is the reason that it's happening is because the politicians benefit from it, right? If I can go in and I can get you to vote early, then I can just tally it on my mark and then I know who to focus on, right? So from a statistics perspective and running a campaign perspective, the candidates really like the vote early because there's things that they can do to gain an advantage in that situation. Okay, I'm not even talking about like the possible fraud and all that nonsense, right? Okay, that's why they like it. Okay, but what bothers me about it is the way that they're able to turn around and convince other people like it's a good thing for them, because it really isn't. When you vote early, you're giving up some of your power, right? Like that candidate, he has your vote now. He can rest easy, you know. He can do whatever he wants now. He's free because he already had your vote, right? They don't have to worry about when that bad news comes out at the last second or any of that sort of stuff, right? It is to your advantage to withhold your vote as long as possible, and then on top of all of that, it is more secure. Like there's a reason why we've had the mail for hundreds of years and we did not have mail-in voting, right? So yeah, and you know what? My state was one of the first places to really try and push it. And I feel that they're really dishonest about it. The reason they did it in my state is because the establishment Republicans have a very difficult time dealing with the grassroots candidates. And they have done all of this work in Utah to try and change the playing field so that those grassroots candidates aren't so powerful anymore. Right now, they're trying to turn it into whoever has the most money wins, because they want the moderate Republicans that will spend money. Because right now Utah is a very conservative state. Now the good news is that balanced budget and all of that is written into our constitution, so there's only so much they can do. But still, it irks me. It irks me. I'm a bit dumb about it because Australia, but why doesn't the US have 3 days of places you can just go? Oh, I think that they should. Dennis, I think that that's just kind of a matter of getting it to happen. And kind of the problem that you have with any kind of change to the vote is that the politicians aren't going to vote on it based on whether it's better for democracy and whether it's better for you. They vote on it whether it will help or hurt them in the next election, right? And so you're always going to have half of them that want it and half of them that don't want it. I really don't like vote by mail. I really don't think that everybody should vote. But having 3 days of in-person voting, good idea. I think so. Good idea. So that everybody has I'm all in on making sure that everybody has a fair opportunity to go to the voting booth without having to worry about who's going to watch their kids or I can't get work off or any of that, That's not true. It's the same for everyone. Politics and trading have nothing to do with each other. Not true at all. Not true at all. The market very much reacts to what's going on in politics, and it's kind of unavoidable because the government practically is the market these days. It hasn't seemed like that so much lately. When it was the trade war, oh man, okay. And even some of these stimulus bills and stuff like that, it seems like that the market doesn't care as much about this stimulus bill. But I kind of think that the reason that they don't care so much about this stimulus bill is because, one, it turns out that we don't absolutely need it, and two, I don't think that the market actually ever thought that it was going to happen. But could be wrong on that one. I have seen a move or two seem to be related. Oh yeah. See, now everybody's going to come out and they're going to say that they stole New Jersey, which, I mean, I don't have the stats in front of me or anything, but I'm going to bet that when you look into the numbers that's going to be a ridiculous assertion. But are that, I should turn the robots on. Thank you, Win. Where is, by the way, the control center? Yeah, it's over here. Bring it over here. Oh, the strategy got removed. I'll deal with it tomorrow. You know what? That's really annoying. When your workspace gets screwed up, the strategies are lost, are removed. Your short ES here. Okay. Really interesting thing about trading US markets is I've realized how boring the ASX is. Now when I see something, I'm like, yeah, that's cool. What's happening in the US? It is. Well, you know what I don't understand is it seems like that Australia has a pretty strong day trading culture. Like, there are a lot of people in Australia working hard and trading, and I kind of wouldn't expect that because it just doesn't seem like a good place to trade. Maybe some of the laws there around trading and the taxes are more favorable to it or something. I don't know. So I've seen a lot of Australian traders, way more than I would expect. I mean, this stream I get a lot of European guys, right? Because Americans don't wake up so early. Well, I would have thought, the stream would get up and going and there'd be a lot, there's lots of people here before the market opened, and then when all of the plebeians come in, that they would be boosted up and everything. But I don't know, maybe someday it will work that way, but that's not the way YouTube works right now. ECB's Villeroy, there is no reason for the ECB to raise rates next year. It's because Australians love a good gamble. Is that it? You know what, man? I think I feel like that there is something about Australian culture that I am missing, because the things that go on in Australia are really confusing to me. They're really confusing to me. Like, that the Australian government went so hard on pandemic restrictions I don't get it. That is not, there's never in a million years would I have predicted that. I thought that they were relatively, biased towards freedom on those sorts of things. It's a thing I've realized recently too. Every maybe 1 in 5 people I speak to around are in crypto indices or at least something. Well, I think that's kind of a widespread thing. What was it? Let me find the study. Nearly half. No, that's not it. Okay, a recent study, this was in May, a recent study from People's, I don't know. Anyways, found that 49% of millennials polled own cryptocurrency compared to 38% of Gen Xers and 13% of Gen Z. Okay. So what happened? Here's what happened. I'm telling you, I don't know why. Maybe it's because it's planned. The media doesn't tell you this, okay? But I'm telling you, it effing happened. I can see it in the stats. I look at it all the time, and I ponder about it. Okay, when I started out doing this stream, it was because there was a contest on Futures.io. I mean, I liked the whole idea of doing stuff on YouTube and live streaming and stuff. That was appealing to me. I had made some videos before this. I remember way back in the day, I had a YouTube video or two that was just an isolated thing, but that I was able to make it cover our own stuff. So I was kind of, wanted to do it because of that. But Futures.io put out a journal contest that was video. So I was like, okay, fine, I'll do it. I got all this stuff. I know what to do. I have, OBS and everything to record it, and I'll do it. And it's kind of funny going back and like doing this without anybody to talk to. It's kind of weird, but I did it and nobody wanted to do it. And when I searched for stuff on YouTube, there wasn't really trading content on YouTube. Like there was channels like, UK spread betting and those big channels, right? But there was certainly nobody doing day trading like I was doing, right? And it seemed like it was like that for a long time. Like I was the only person crazy enough to do this until like late 2019. In late 2019, Wall Street Bets as a subreddit started to become more widely known and popular and a cultural thing. And it was like at that point when these guys were making these crazy trades with options, at that point, the algorithms picked up on it. It was like all of a sudden Google said, oh, there's this category of stuff. It's called trading and investing. And this content is all related. And these guys that like this, they like this, and this. And then all of a sudden it was like the algorithm was pushing stuff. So when I made a video like how to, what you need in a computer for the hardware, it sent all of the people. The algorithm just did its thing. And when you look at the channel, how it did before that late 2019 and how it did afterwards is very different. Now, since then, it's kind of come down a little bit because I haven't been posting content very well. I'm working on it. I keep buying stuff to like try and help my setup work better so that I can make content more often. But it's hard. I'm sorry, but we're getting there. Okay, we're getting there. I hopefully we'll fix my problems this weekend because the problem last weekend was I recorded it and I didn't have it framed right. So I went and bought a video screen. But the algorithm picked up on it and started giving it to people. And once the algorithm picked up on it and started giving it to people, it was like millennials woke up financially. Because before that, I could not get my millennial friends to care about this stuff, to be interested in the markets, to invest. They thought that it was a racket. You shouldn't invest. You shouldn't put money in the stock market. There was gambling, and it was then the algorithm changed their minds. It's just flipped a switch, right? But it wasn't the stock market, right? So many of them went into cryptocurrency instead. And so now it is the case, no matter where you're at, Australia, United States, or whatever, a large portion of millennials are more interested in playing the market than previous generations have been, and they're more likely to be in cryptocurrency. There are always lots of new amateurs at the end of the cycle who must come in and be world champion, but I don't know about that. I don't feel like we're at the end of the cycle. That's the thing, is that here's why I don't like that take. I'm not meaning to trash a TLA trader, but I think that there are really clear let's say I think that there is a considerable amount of data to suggest that millennials were influenced into doing this. Okay. I think there's a lot of data to suggest that millennials were influenced to do it. They weren't interested in it until the algorithm started picking it up, and all of these gurus picked up, and they've been following them very, very strongly. And I do not see that trend reversing, which means I think you're going to continue to see more and more money trying to come in on this sort of a thing until there is a crash, right? If there is a crash, if Bitcoin crashes at the end of this year, and I think that there's a strong possibility that it will, and I mean it crashes, because if it goes, it's going to be a 90% decline, right? And if its Tether is involved, it could be even worse. And even if Tether is not involved, it appears that the Bitcoin market is really concerned about Tether and understands that it's a fraud now and is moving away from them. So they're not going to be able to do the things that they're doing. And USDC, I think that USDC had some problems in the beginning, but USDC has now been trying to play the game fair. So what that means is that if we do go into a cryptocurrency bear market, that it could be a very, very long bear market. Okay. What kind of societal impact is that going to have when you have 50% of millennials lost their investment? That's going to have long-lasting economic effects, I think. Looking at someone who made $50 million on a $100 investment on Bitcoin, why can't they make it on Shiba? Ha ha ha. Yeah, well, and one of the things that I don't understand is that it seems to me like a lot of influencer strategies that don't work on me seem to work on millennials really well. It's super weird to go and read the comments of some of these videos and people pumping a coin. What was it they were trying to pump on TikTok in the comments of one of my videos? I couldn't remember what it was, but somebody's like, get in on this thing, and then somebody responds up okay, you want to waste your money on a gamble like that, that's fine, but don't try and drag the rest of us into it. And he's like, okay, but it's gonna move, and they're gonna put it on this exchange, and you're just gonna sit there and not make the money. And they were really running it on, you should go and make an investment on some FOMO comment that somebody made on a social media app, you know? Like, isn't that crazy? But these people are like dead serious and they put tons of effort into it, trying to pump it. I think it's a combination of things, in my opinion. Debt influencers youth. I think one mega understated thing is a late maturity age and the age of debt that is understated. More money to invest while living at home. That might be. You got out. Did it come back? Not very much. When you said that you were short, I was kind of a little because it just didn't seem to me like it was likely to move. But it was way more constrained than I thought it was. I'm thinking about it now and I'm like, wow, it really did not do much of anything since that time. It reversed, it bounced back, you know, it came off of the lows a little bit. I wouldn't say it bounced. Bounced is the wrong word. It rested a little bit and it just did nothing. It just absolutely nothing. But here's the open. Will we get some moves on the open? I can still see in the treasury, by the way. You know, it's funny, like we get this bearish move down, but now it kind of feels like this slow churn order flow buying is coming back. I'm kind of wondering if we're going to see the highs of the day at some point. Is that one worth making a bet on? I'm not so sure. The thing is I've been getting this a lot where I really get an inkling that the flow is going to do something, but I don't actually have an informational edge that suggests to me that it's going to do that. So I sit out and then it ends up happening. But I think that it's best for me to sit on that. I think that if I really wait for when I know that I have the informational edge, that I'll do better. So now, with all that said, a short in the E-mini wouldn't be out of the question, right? I think that there's going to be at least a little bit of flow on the downside here. There's some strong buying in there, though. There's some very strong buying in there. It's a good day to stay free from trading. Yeah. Well, you know what happens to me is sometimes I'll go through this period where I'll start making bigger bets and I get a little carried away, and then bad things will happen, and so I just have to like completely back off. And kind of what happened this time is I got to that point and I made some trades that were a little bit outside of my experience. I'm glad I still took them because there was things that I needed to learn from it, and I learned what I needed to learn. Like I wanted to know, okay, what about this thing, and I saw all of those things, and so now and the result of that is, okay, I need to go back, and I think that for those kinds of trades in particular, I think that I need to have a little bit of a different framework to work from. But they hurt. But it was not actually, it wasn't a big deal. Like it was trivial in the end. It was a trivial loss in the end. And you know, I was actually able to claw my way back and make that money back. Although it's hard with the commissions. Oh my gosh. Okay. And then what will happen is sometimes I've done that and then it'll happen again and again. There's like the volatility again. And I'm just looking at this one and I'm like, okay, well, when the volatility, the tails come, like those are opportunities for sure. But this opportunity, yeah, it's not an opportunity for me. Not at the moment, because I really don't have the informational edge. I really think that the Federal Reserve is going to come in and just meet my expectations. And I don't see how that results in these strong market moves when the market is all like geared up for it to happen, you know? Moved a couple of ticks for scalps was enough, yeah. Hope it works. Maybe they smack the ES down. Do you see though? There's a good 3,000 to 4,000 net contracts buying in the ES, but it's struggling. There's usually a move down, right? Like there's usually a push both directions, especially after this long. Because if it's just going to trend up, it would have already taken off. It's already been 5 minutes. The market is more random when we are in balance and waiting for important news. But do you think that we're in balance right now? Because like that's what's irking me. Okay, like if the market was just kind of dead, I might actually be a little bit more willing to try and do something, right? But the reason why I'm nervous is because I see an imbalance in the market, and it seems to be a persistent imbalance, and I don't know where it's coming from. It doesn't make sense in my contextual framework. So from my perspective, like the best I can do is just kind of sit back unless we come out, the news comes to a certain point, and then maybe that could be a good opportunity because it's mispriced, right? Like I need something to tell me that this move up is not based on the fundamental information. This move up does not have informational content behind it. That's what I'm looking for. And if I get a piece of news that is clearly hawkish for interest rates, then I'm gonna come in and I'm gonna short the hell out of them. But I don't think it's gonna happen. I think that there actually probably is some informational content behind this flow, and I don't know what it is. Okay, so there's a little bit more extended of a sell in ES. Covering with brackets, you say? Oh, I see what you're saying. I'm wondering if we could try taking as a trade in the Xeon on sim orders, yeah. That would be a hard trade. I think I kind of have to, like, there might be a little push and pull here, so I could try putting an order out there and see if we get lucky. Balance sheet date. Oh, did they just creamed me there on that, didn't they? Before I even saw it. That's funny AF. So that right away is we are not in the kind of flow that I thought we were in, because I thought that it would just be a little bit of a trickle, and there they swept it down 2 ticks pretty quickly. Yeah, now you're going, I'm actually kind of liking that ES long now a little bit better, but oh, that's not what I wanted at all. I'll let that fill and I'll try again. That's rough. Okay. Let me just flat that. Because what I want is... Oh, I can't even remember. Oh, there it is. Scale out. Okay. Okay. We'll just try playing the risk here, because I think that we can do it with relatively safe for me to do it here. I think when you're seeing a pretty steady change in cumulative delta and you're not seeing price go along, that can kind of be a warning sign. But the way that it's going in this particular location makes me feel like that for a sim trade, that trying to put on a little risk here and seeing how it goes could be fun. Let's see. So that's more excursion than I would like, right? No. This is just going to be a market that no matter what we do, it's going to frustrate the hell out of us, isn't it? Hold on for a bit, Ace. We don't have to be. Why should I be, if I'm in something and I'm telling him like, hold off, that sounds kind of silly, doesn't it? Maybe I shouldn't be in one, huh? NASDAQ says balance. I still, it doesn't look balanced to me, to be honest. No, I'm long. So the problem that I'm having here with going short is that um, there is a pretty steady rise in cumulative delta here, and I can see it in the flow that there are people buying it. They're just they don't seem to be getting very much out of it right now, and the market is being really flaky. And so that's why I'm a little hesitant about shorts. It doesn't mean that the short's not going to happen. In fact, if the short does happen, it might actually be like a really good short, right? It's just, this is kind of a sign that it's a complicated trade, right? It's not predictive on which way it's going to go, but it's an unusual situation if it were to go short here. But do you see how when it's moving up, you're hearing the click? Now, the clicks are actually happening pretty far away from the market, but somebody is working the market here. I know they're doing something, but there's too much noise for me to tell quite what it is. I think that it's a buy because of the cumulative delta with the way that it's going, but there's a little bit too much noise for me to know for sure yet. But I thought it was worth a gamble on Sim. That's why I took it. You can see how hard it is to get fills on the offer, though, right? That's frustrating. The click are the large orders stacking and pulling. So like you just notice how the clicking is really consistent. It's moving up, you start hearing clicks. So there is an algorithm working the market out there. There's like a buy or a sell program doing something. See, it doesn't do it when it goes down, but when it goes up here, click, click. Treasury down at its lows again very easily, huh? McAuliffe concedes. That's in the Virginia race. I don't know if I've ever had a trade in the ES where I've been that close to getting filled for so long and not gotten it. But for you, Ace, one of the things, well, maybe you don't want to do this, but I'm just thinking like you might have better opportunities after FOMC, but you might have better opportunities tomorrow. So certainly don't do anything where you would feel uncomfortable trading tomorrow if you lost again, right? Hmm. I was just thinking, saying in there in Discord that you have an easier time getting filled on the limit in the treasury right now than you do in the E-mini. It's like, look, they've ticked into me a ton, right? And it hasn't filled. And look, they're trading all of them too, right? Like I really am like in the queue. Now, in the treasury, the interesting thing on this one is that the move down came in the 10-year. Like there was net buying in the 5-year. So this time it happened in the 10-year. Is that a flattener coming in maybe? I don't know. It's hard for me to sort that out. It's a little weird. It's a little weird. See, Futures Traders 71 says traders looking for moves in this action are like hitting their heads against the wall. Yeah, it's like anytime that it gets above 18, it kind of sputters out. I don't think this meta order is done though. There's that click again. That time it bid stacking and pulling at 15, right? Now the treasury is sitting there at its lows, like just waiting to go, but it's just not quite doing it. It looks like there's a few scalping robots in there getting shoved around a bit. And it might go for a new low there in the treasury. It went bid and they were almost immediately like, nope, I want that. Pushed him out of the way. See that? Yeah. As soon as they put like 400 on there, he sells it. Gold, by the way, is still getting creamed. Okay, there was the new low in the 10-year. Back to 1.6. The rates and the prices haven't completely coincided, because yesterday 1.6 was at 131 even. Maybe that's because of the spread. I'm starting to wonder if the difference between the 10-year and this really being like a 7-year is really what's causing the difference between price and yield, and not an actual dislocation between price and yield. I need to get into to the Ultra 10 or whatever we call it to see if they're actually in line. That was a pretty good push through new lows, though, and a pretty decent change in deltas too. It could, of course, reverse, but it looks at the moment like the beginning hints of a strong daily trend. Okay, finally got a fill. Good grief. Good grief. You got the 2 points on the long. Good job. Here's hoping. Yeah, we should acknowledge that. I think we had a bit of luck today. Yeah, huh? I mean, obviously it wasn't all good luck because he stuck a few there that just didn't work out. But I think there's been a bit of luck involved in this today, huh? I'm wondering if they're really going to give me a hard time about getting 46.21. Since they gave me such a hard time about the first one. Okay. Well, we can let it ride. Especially since we're like there at the highs. I mean, if they break the highs, I think we should get a pretty good move, yeah? Having the cumulative delta and the price lagging on there kind of suggests that if they do break through highs, that we'll get a good rush. Because there's probably going to be some market makers on the wrong side of it. First Squawk tweets Coinbase is testing a subscription service with 0 trading fees and prioritized support, says the block. Oh, yes, that's great. I have to pay extra for support. That's what I want from my brokerage. That's the model that we need brokerages to go to, is that your support will be really shitty unless you pay extra. Okay, we're getting pulling here. Do we have news that I forgot about here? Yeah, we do. Factory orders. ISM. Yeah, ISM is kind of a big deal. I don't have a... oh, no. The estimate is 62. Good deal. Okay, so clearly it was higher than expected. $66.7 versus an expected 62. I'm surprised that moved. I haven't seen them move off of ISM quite like that before. They did pull for it, so look at that. The 10-year just got crushed off of that, right? Now the ES, it gave me good fill and all, but now on this one, I should adjust some things. There we go. You use that to increase my risk so that there's a better chance that it gets to my target. Of course, I'm risking everything that I made, but that's okay. Well, the treasury could keep going here now, man. I mean, yesterday's low was 20.5. So, like, when you think about that, right? They've got some room to trend if they want to. The liquidity in the 10-year, though, is very damaged. See, they're only putting up 1,700 now on there. I mean, usually they recover a lot better than that. That is curious. You see it drop to 15 in what, the 10-year? If they got all the way to 15 today, that would be something. not today, but like before FOMC. Interestingly enough, though, despite the huge whoosh that we got when that news came out on the upside in ES, they are still being difficult, right? In MES, okay, it's 15, 46.15. See, when you do the whole price, then I'm pretty sure I know which one you're talking about. But when you just give me the last two digits, that's like that could be any one of the DOMs I have up. Like here's 15 in ZB, here's 15 in ZN, and here's, well, 15 is a little bit further away in the 5-year, but you know, like they could all touch a 15 today. So that's some pretty powerful selling. They came back pretty good. So I was thinking, well, now I might have a chance to do something, but they didn't quite come back as much as I had hoped. And ES is selling. SEC Chairman Gensler, we will be, quote unquote, very active in bringing the digital currency market under its investor protection framework. NQ leads and ES lags? Yeah. Well, NQ usually leads, doesn't it? But I'm not willing to read that one yet as like a new trend down. I still think that's ES being difficult. But we'll see. We'll see. Also, you saw ZN there push down for another new low, but I don't think that this is a good area to try and get involved. Like they have created a big hole there. They have literally ripped the fabric of the liquidity over there in ZN. They're still only putting 2,500 up yet. It hasn't recovered. It's going to take some time. Could see another move down, but they're gonna have to recover. Oh boy. Goldman Sachs to use digital assets technology to build an open platform for tokenized assets. So they're gonna build an NFT marketplace? Are you for real? Alligator says surprising figures. So let me come back in here and look at what these were all. ISM services PMI was 66.7 and factory orders month over month was spot 2. Is that really that big of a beat? It is. It's a really big beat. They really want us. They're really anxious to sell this, huh? Are we going to see? I mean, I haven't seen a dislocation in the treasury on the downside in a long time. But they might, yeah, it might be happening, guys. Wow. Yeah. that does kind of suggest that Alligator is right, and that there's some people out there that are really, really caught off guard by this. Maybe they had acquired a significant long position, and they're just having to puke it as fast as they can, because like the liquidity can't handle the selling, and they did it anyways. So there's this whole thing with like the square root law, right? Remember that with the size of the meta order, that the impact starts to decrease because of what it does to the order book. So when we come in and we see a move down like that, and we see the order book damaged in that fashion, and we can see that particularly on the inside, they're not putting very much up and everything, and you can see the price slow down and back up, you know, that's kind of a sign that they're going to have to wait like 45 minutes if they want to sell more. But there are some situations that I call a dislocation, where the size of the meta order ends up being so much and so aggressive that it just doesn't matter, and it slips through anyways. And that's what just happened there in the 10-year. They just slipped through to a new low that easily, like that. That is like a sign that that somebody is really, really in a bad spot. Now, another thing that we should note, they did flatten a little bit again on that move. They did flatten a little bit again, and but the volume was pretty much across the board. So I'm looking here on Forex Factory. That's the biggest beat in quite some time. I could be wrong, but every single time non-manufacturing ISM has come out with Fed rates right after, we get a 20 VIX easily 100 to 50 to 100 handle move. How many times has that actually happened in the past? I mean, that's probably more to do with the just the specifics of those specific instances when it happened, right? It's possible to make your own bot without any trading software. Well, you could go and pay for Rhythmic API Plus and plug into it directly with your own program and write it in Python or whatever it is that you want. The thing is that your question, Bob, kind of, it's a rough question, because do I think that the S&P 500 is going to do an easily 550 to 100 handle move? I think that that's a very real possibility today, but I don't think that it's going to happen in like the next hour, you know? Yeah. I mean, to do the Rhythmic API, it costs money, though. That's the problem. It's like $100 a month or whatever. But you can do it on your own platform, yes. And I think that's quite appealing right now, because there are a couple of things about NinjaTrader that if you want to get into some advanced things, because they're like still on the older versions of .NET and so forth, you can't necessarily integrate the libraries that you would maybe want to. That's kind of where I'm at. I'm kind of sitting here stocking, like waiting. Maybe there will be a platform that will come out. Maybe Jigsaw will do it. Maybe somebody else will do it, where I can just plug into it with Python and do machine learning, because that's what I really want to get into. I think that some of these concepts, I mean, I could find new concepts. I'm sure that I will. But I don't think that I'm completely done developing the concepts that I have, and that I need machine learning to sort out the next steps. So So the 10-year is just chopping all over here in this spot. So there's now you're definitely in a hole. Okay, well, the order book is getting back to normal though. If only I was this lucky when using actual money. That's how I always felt. You know what I think fools you, Dennis, is that you do end up taking risks in your paper trading that you don't end up taking in your regular trading, and the market tends to reward you for taking on a lot of risk. I was hoping that the 10-year yields were going to come back to 1.6 and I could try getting short again, or long again, but I don't know if that's going to happen. I'm trying to adapt to keep it simple, stupid rule. Wow. I don't know, man. I'm not. I hear that a lot in the future space, and I kind of feel that trading is really complicated. You know. Traders, will you please take care of the channel by hitting the like button? No risk involved. Win, thanks. Helps the channel. Plus, it's good karma. Yes, it is. You guys have helped the channel so much. I appreciate it. I feel that I have not been performing as well for you guys as I should be in terms of making content, and it's really eating at me lately. And I really hope that this weekend I can kind of fix all of that, because I think I've got a good set of stuff for you guys. I think that for you guys that watch this regularly, you're probably going to know a lot of that stuff, but it's still going to be like the most pertinent to your interests video I can make. So, and for new people, it will be everything. I hope. No, I do believe it will. I think I'm giving you some really strong stuff for new people. So might be some videos of getting more specifically into order flow. Do you stream daily? Yes, sir, I do. So make sure you subscribe and hit the bell icon, and then you get the notifications. But I have in the video description, there's like a permanent live stream link, and the good number of the guys that are here, they just bookmark that, and when they load up their browser in the morning, they just pull me up automatically. That's the best way to get in here. But starting at 8:20 Eastern time, I'm here every weekday. Yes, still being difficult. Well, let's read this story about Goldman Sachs. Goldman Sachs will work with Digital Assets Core Technology to develop its end-to-end tokenized asset infrastructure, supporting the end-to-end digital life across multiple asset classes on permissioned and public blockchains. The investment bank will use DAML, Digital Assets Platform, for building multi-party applications that run across new technologies and legacy infrastructure to move its tokenization plans forward. Concept the financial services community sees as creating efficiencies and opportunities. Oh, okay. So they're not making an NFT marketplace. They want to make an over-the-counter they want to make an over-the-counter trading app on the blockchain. That's probably what they want to do. Which is where I think the technology can be powerful. So DAML, that's what I need to go and learn then, huh? I crap you not, though. I've been at this 3 months daily and I still feel like, oh yeah, dude, no, it's years, man. I gotta make sure you understand now. It's gonna be like years. And the thing that gets even crazier about it is that the longer you go, the more you will realize how little it is that there's just impossible for you to gather all of the information that is available in the market. It's just so mind-bogglingly sophisticated, and the information that is just so large, no human brain can hold it. And you will just be burdened more and more by how little you can actually know. And that's why we have a market. A lot of traders have just one trade set. Yeah, but a lot of... you didn't get me started. When you say that, I immediately think, yep, okay, then you have this one setup based on price movement that doesn't actually work. You know? The way that I would take it, though, more is that, like, you want to have a certain kinds of situations so you understand really well. Like this SPAC thing, that would be like a good example, is you could go and you could become the SPAC expert. And all you do is trade SPACs. I don't think that would be a very good place to go into, because surely the SPAC popularity won't last forever. But maybe I'm wrong. But you understand everything about SPACs, and then there's information that you'll know that gives you an advantage over all the other traders, right? How long are your normal trades? Do you scout for a few ticks, or do you take longer trades? That's a good question. So it's been pretty varied, but lately, with the trades that I've been taking in the micro treasury futures, I'm usually in for about an hour. On those. I haven't taken a live trade, by the way. Should note, if you're new and you don't know what's going on. The ones that I'm taking in the ES are sims. But I would take one over here in the micro treasury and maybe be long at 1.6 and be looking to get 1.62. And that would take about an hour and a half. Now, I was doing some where I was really trying to let them run. I had one where I let it run overnight and it worked really well, but then it came back. So I think that I still want to do those sorts of trades, but that I need some more. I need something more to be able to handle the risk of being in for that long. Yeah, Futures Trader says this is officially a shit show in ESF. It's pretty It is getting pretty messy. Now, you know what? Actually, let's manage this, because I'm not hearing the click anymore. I'm just realizing, like, yeah, we were getting a large meta order and everything, and then we got that big move, and now that that's over and things are recovering, I'm not really seeing signs of the activity anymore. what we're looking at right now looks to me like just liquidity trying to recover. Not a lot of doctors, lawyers, pilots are ready to compete at the highest levels after just 3 months. Yeah, but like a doctor, I think a doctor is like a really great example. Okay, you're a doctor, you go to school. Like medical school is brutal, right? You have to go, like, first you go through the prerequisites, right? And those classes are crazy. And the people that go and they take those paths, whatever, degrees, yeah, the people that pursue those degrees, they have no free time, right? It's just study. So think about all of the information that they're absorbing over years, and they're doing that for years, and then you have to get into the school, and then it's another 3 or 4 years of hard, dedicated learning that the majority of people drop out on. And then you have to do like your residency, and you have to actually like build up the experience and everything else like that, right? Okay. Most of us do not understand what it is like to be an expert on a subject in that way. Especially not retail day traders, because what did we do? We went and we read a couple of things on the internet, and if you knew everything that it was that you needed to read, like say somebody had it all set out for you, you know, you're probably still only have a few months of reading material, you know, and the difficulty is more just like the screen experience and finding information that's actually ends up being useful, right? But then you try and apply it to being a doctor, because the reality is, with as competitive of a market as things are, really you would want to be as expert of as you can on this sort of a thing as a doctor could be, right? And it turns out that there are people out there in the financial industry that are like that. It's just they work for Goldman Sachs, right? And then now you kind of know what you actually have ahead of you, right? And that's why I tell people, like, start reading research studies, start doing math, man, because it gets so deep, and most retail traders just don't wade into that to where you can actually find real edge, because we just don't know what it really means to be an expert. So I feel like I've learned a couple of things that were really, really powerful, but I know nothing. You know, I would never have come up with those things. There's no way in a million years that I would ever understand the math and come up with all of those models. No way. It took them 30 years to make it all. It's all building on top of each other, right? So I know nothing. And then I turn around and I look at the rest of the retail trading industry and what they talk about on Reddit and everything, and I'm like, and those guys don't even know that exists. Like that's like the basic stuff that's hard for me to understand, and most people don't know it exists. You know? Okay, so I did get out of my ES trade. I think that was appropriate. HFTs are more sophisticated than SAGs. I wouldn't say that. I think you got to understand that there are very different entities that are playing very different games, and they're both extremely sophisticated in their own right. Okay. Like the guy that came up with Black Scholes, he was working for GS at the time. They both do something that's really sophisticated, but they're very different games. And you as a retail trader can gain insight and edge from exploring the sorts of things that both of those do, right? Markets are not. They are more statistically efficient than they are informationally efficient. But they're actually pretty mathematically efficient. Like, it very much looks like noise. Took them, like, that's the thing, is it took them 30 years. It took them like 30 years to prove that it's not actually random noise. Maybe even more than that. I think you could even go back to the 20s. Okay, so if we go back to the 20s, I think we could say that it took us 100 years to really, truly convince ourselves that the market is not just random walk. And even today, there's still a lot of people that think that it is. That's how mathematically efficient markets are. U.S. Senate Majority Leader Schumer says he had discussions on the economic agenda bill until after midnight. Well, weren't they supposed to be going forward? Oh, that's tomorrow. They said Thursday. Okay, so I guess there's oil numbers. They've definitely found the hole and decided to maybe start balancing around it. We could wait. Maybe after 8:45, we could get another leg of meta order. Will that efficiency? No. I'm going to do that video too. That one's a little bit further out. Would you like that one after these next three? The one that I wasn't trying to be like build hype around it or anything. The videos that I'm working right now are crash course guide to using the order book. So that's where I feel like this beginner's one, like when I recorded it on Saturday, even though I screwed it up, but I felt really good about my content. I felt like I had a really good explanation that would get people to understand what's going on very, very quickly, and had some guides about what to look for that would help a lot. And it's content that you're not going to get anywhere else, and is going to be really valuable to new traders, and it's going to be valuable to really anybody that watches the order book, but maybe not as valuable to you guys that are here every day, just because you've heard me say these things before, just maybe not all in one spot. So you're still going to watch it and enjoy it. I guarantee you that, but that's why I'm so excited about it. I don't know how many people out there are really actually looking to learn about the order book, but I feel like I'm about to put out the best free resource on reading the order book. So I got part 1 written out. I kind of have part 2 and 3 outlined. Maybe I'll try and fit part 3 in there together, but you can't apply an abstract formula to make money all the time because the market changes randomly. Well, yeah, but aren't you just saying markets are statistically efficient? Isn't that the same thing? Bitfinex is on Twitter posting some evidence of a trading firm in New York trading with Bitfinex, even though Bitfinex is banned from doing that. Wow. Kathy Woods ARK Invest buys 288 8,813 shares of Zillow Group Incorporated coming from their fund report. That's curious. Shall we go and look at what the chart looks like? And actually, I want to pull that up. I'm gonna do it in TradingView. Shall we see how Zillow did? Because when I was looking yesterday, I'm like, yeah, those are gonna be funds that are gonna get out. So it doesn't exactly tell me much. Okay. So here it is. Okay, so they got hammered overnight. They opened quite a bit lower. They are just kind of sitting flat here now this morning. So if they bought it, when did they do it? Did Kathy Woods do it here? That's curious. Kathy Woods did it here, and then it's down here, down this way because of the market makers. I'm just saying that the market is like, yes, it is. Yeah, well, I mean, that's the thing, is that you can find an inefficiency in there and then you start trading on it. And the thing that people don't realize is that the amount of money that you can actually pull from that is actually limited. So if you're aggressive and you start sizing up, you actually can completely remove it all on your own if you're doing it right. In fact, the goal, I think, would be to remove it all on your own. And just know how much of it to actually take, and then use that and what you make from that to build up and find other ones, right? Build up an infrastructure and start finding other ones. Okay, House Democrats are adding 4 weeks of paid family and medical leave into their reconciliation bill. Well, good. I'm surprised that they took that out before. Now, for me, well, let's wait a little bit. I'm kind of looking at this like, okay, well, can I try going long rates again? Is 24 half a good spot? I don't think that it's particularly great, but in this situation, that might be the best you get. I'm going to feel awfully silly if they come all the way back up to like 29.30. SMB Capital uses the book and they say it's the only edge that stands the test of time. Well, when you say that, one of the problems that I kind of see what saying it like that is that the term edge is a little too loosely defined for some of the purposes that we have, right? Like, I can come in here and I can say the order book matters, and understanding the order book, it gives you an edge on the market, okay? But it's not a quantifiable edge, right? It's a qualitative edge. Whereas when I was talking before, there are edges that you can get when we're talking about a real statistical edge. There's edges that you should really be able to quantify, and you should be able to calculate how much money you can make from it. You can estimate these things quite accurately, right? The order book is kind of a little bit different. Like the people that are quantifying an edge off of the order book, they're using like machine learning neural networks, right? So you as a person coming in and using the order book, can we quantify that? Not really. I can tell you that it's definitely useful. And I can explain to you why, right? The explanation as to why is because orders move price, and price is just a result of what the orders are, right? But if you come and you approach the order book from a perspective of, okay, I'm going to look for a certain kind of aberration that doesn't happen very often, and then I'm going to track what happens to that aberration over a certain period, and then based on the statistics that I derive from that, I'm going to formulate a trade that gives me a probability and a good risk reward based off of it. You'll have some success, but it will be limited, because that on its own is not enough. Because even though orders move price, orders don't necessarily predict new orders, right? That's why what you really want to do is you really want to have something that really truly predicts new orders, and then understand the order book well enough to understand why price is coming out the way that it is because of that anticipated order flow. And then you can actually predict price and to make a good trade, right? Well, you can backtest it, but this is what I'm saying. Like, if you from my investigations on this subject, I think that if you're going to make money from automated trading off of the order book, that you're probably going to need a neural network. So that kind of means that we kind of need to adjust our understanding of what is an edge when it comes to the order book, right? If the order book doesn't predict new orders, why do you want to use it as an aid tool to be more precise on your entries? Well, because it's not going to tell me that a flood of orders is going to come in on the short side because the ISM manufacturing number is going to be higher than anticipated. It's going to be like a huge outlier in terms of how much it beat, right? The order book can't tell you that. The order book can't tell you that. What can the order book tell you? The order book can tell you, okay, now that I know that, or if I knew that it was going to come out, or now that I know that that it has come out and that it was higher than expected, and I know that that flow is coming in, what is it going to do? And what is it going to do to the resting and latent liquidity? And there you could see as it played out, right? There was the initial move down. The order book was extremely disrupted. They had two further pushes beyond that. It was very extreme selling volume, but because the liquidity had been damaged as much as it was, they were not able to get much below 24. And we could see it as it happened, and ergo we knew that it wasn't wise to be trying to go short at 24, that we had already missed the move. Right? Was that not an edge at that point, right? But you see, it wasn't just the order book, right? You have to know what the orders are going to come in at. Once you know that the orders are going to come in, now we can use our edges. Now we can use what we know about the square root law, the inverse sine law, Walrusian auctions, order clustering, and all of these sorts of things to kind of know how it's going to play out once it begins. That I always have to put caution on that, because people want to be able to come into the market and look at one thing and not really understand what's going on in the market. Their approach is, I want to make money by knowing as little as possible. And if that's the approach that you take to trading, I think you'll have a hard time, right? The trader that's going to do the best, that's going to have the best advantage, is the one that tries to know as much as they can. One problem I have with the order book is that it can meld past flow that can be misleading without being drilled on the immediate. And even that is difficult because there's always the other side eating. Well, I'm not sure if this is what you're saying, live action, but I think another thing that we got to do, and when we come in this and we say there's an edge to using the order book, that doesn't mean that technical analysis works, right? Because I think that's immediately what people jump to. That's immediately what people start thinking. As I say, okay, there are edge to the order book. There are behaviors about how it acts that are different from a random walk and are consistent and have been proven to be structural in nature. And so immediately people start thinking, oh, I can use technical analysis. I can come in and I can watch some market data and then I can make pretty accurate predictions about what is going to happen in the future. And no, it doesn't work that way. It doesn't work that way. Technical analysis, as in using past price to predict future price, it doesn't work. But understanding why the order book behaves the way that it does can help you. But you can have an easier time predicting the future by knowing what's going to happen. You can use a tick chart like an order book is what. Yeah, you could. You can use. So the whole thing here is you can get the information that you need to know about the order book from a chart. It's true. I just don't think that you're ever going to get a chart that's going to show it to you as well as watching the DOM live. Because there's some things that are just so difficult for the chart to see, like how things go in the stacking and pulling. Like I can watch and see every time that it stacks and pulls, every time that it ticks, and I'm watching that and I'm seeing that happen. And how do you represent that in the chart? That's too much information for it to show you visually. It has to consolidate some of it down. And so with a chart, you're always trying to decide which particular thing about the order flow do I care the most about at this time, right? Can you do a video? We're going to talk about that in part 2. Part 1 is going to be, what is the order book? How do we think about it? How should you approach learning how to watch it? Part 2 is going to be me in front of the chalkboard talking about specific situations and kind of some of the logic and incentives behind the different players that ends up causing things to work the way that they do. And part 3 is going to be, I'm not going to go in and derive the equations per se, but I'm going to talk about the effect of large meta orders and how it affects the order book, and trying to read the order book on longer time frames with that in mind. So those are what the 3 videos are going to be. And then after that, we're going to make the video, which is, this is why technical analysis sucks so much. Markets are very statistically efficient, but not informationally efficient. And then after that, maybe we'll do this one before that one. But then after that, they will be, these are the people that shouldn't trade. If this is your husband, you should talk him out of becoming a trader. Then, at that point, I think that I have videos out there on the key pieces of information, that I truly think are important and that I really want you guys to know, so that we can collaborate better, right? I feel like that when you have that understanding of the market, and I think that you guys, like Live Action and Bup, and you guys are here every day. I think that you're gaining that foundation. You understand that, right? And since you've kind of seen that, you can see how the approach to markets changes a lot after that, right? Now you're empowered to be able to come back and say, okay, well, here's an area that I think would be worth investigating. What do you think about that? We can go and program it. We can, like you're much more capable of being able to have ideas at that point that will really actually result in true edge, right? And then at that part, we can just have fun. I think at that point, then what we do is we start making videos to try and target the front page of YouTube. We go and we say, what is going to be the thing that when they read that in the title, that's going to get them the most excited? You mentioned, well, no, what happened, Bob, was I recorded part one about order flow and the who should trade videos. I did 2 of them on Sunday morning. And when I went in, here, I'll show you. I'll show you why I didn't do it. You're going to be like, oh, Seth, that's so dumb. But there's no way I was going to put that out. I've tried recording it twice and screwed up. The first time I screwed up the audio, and the second time I screwed up the zoom on it. Preparing yourself for when you are trading. So you see that? You see how my head is cut off? The top of my head is cut off? Yeah, I wasn't going to put that out. Guess what is the best technical analysis? Not. I'm still trying to figure out what I want the title for that to be, but the way that I want to present it, the idea that I have, I'm not sure what the words are. Maybe you guys can help me, but the way that I want to present it is the argument has been settled. Technical analysis has been argued about for 100 years, and we have information about how prices are inelastic that conclusively explains to us why technical analysis is not a very effective way of looking at the markets. So how do I put that in a title? The final word on technical analysis, it's something like that. Bup says, yes, but to be fair, I'm not sure how many people. Yeah, I think that these will be really good videos and that they will get a lot of content for our channel. But the number of people that are looking out for order book stuff is still quite small in comparison, right? Yeah, it's like why technical analysis is not effective. Right. You've got the idea, Gus. Now what we've got to do is we've got to turn it into this question invoking clickbaity statement that when people read it, they won't be able to help themselves but click on it to see what I'm going to say. You seem to think that news is a leading indicator. News are leading for the low latency guys and lagging for scalpers. And I think it's way more complicated than that, Nasdaq trader, because sometimes, because not everybody gets the news at the same time, right? And some people might know that a piece of news is going to be released or that the number is going to come out in a certain way, and you don't, and so they have an advantage over you on that. But it's not even just so much news. It's just that news is the best example that we can give you as to why people submit orders, right? Any reason that we can think of that will cause people to submit orders in the future and we can predict, that's what we're looking for. And because prices are inelastic, what we've learned is that price crossing a certain threshold is not a very good indication that future orders are going to be submitted. And only a very, very narrow set of cases when a key level has been taken and people have a lot of inventory on. And even in that, you can't tell just from price alone. Right? Yeah, you should create a title that is searched for most often in the trading topic you're trying to cover. Yeah, and I've looked at some of the other videos out there they're on, because like one of the things was who was this guy, uh like Jesus Coder or something. I forget his exact name. You guys know who I'm talking about, right? He made a video about technical analysis that was okay. I think that mine has going to have more key information. I think I understand some things that he doesn't, and I think that he'll watch the video and that he'll enjoy it. He'll really like it. But his video, I had another video way long ago about why technical analysis doesn't work, and his did way better, so much better. So I've got to figure out what is it that he's doing. I've found some odd things. So there was one thing that I saw the other day. I came across this lady, and her channel, I think that her channel was actually smaller than mine. I don't recall, but I'm pretty sure that she had less subscribers than me. But she had a video about getting started in trading. Something to that. It was like a beginner video, and I had a video on it that was really good, and I had so much. I felt like everything about my video was better, but her video had hundreds of thousands of views, and mine only had a few thousand. And I'm watching this, and I'm like, what is it? Why is it that the algorithm latched onto that one and not mine? Was it just the time at which I posted mine, people weren't searching for it, and then hers was more recent? Was it because of her that she's just more engaging to people? I couldn't figure it out. It was really, so I've been trying to gain some edge from looking at some of those things, but I'm having a hard time with it, to be honest. I really wish that I was in the point where I could pay people to figure these things out for me, because I feel like that this is a skill that I'm having a hard time being really good at. He'll see my video. You'll see when we make it. Now the problem is that if I get my act together and I make a video or 2 videos every weekend, then this is all going to be in the next month, right? But if I don't, then this might not be out until next summer, at the rate I've been going. I think it's worth doing an intro asking the person not to leave the video because you think the content you're about to share is very valuable to them and independent of whether they're going to use. Yeah, well, that's the way that the introduction, I think something that I needed to do better, and that I really focused on in writing the scripts for these videos, was giving people the reason to watch the whole video into the introduction, to giving them enough information for them to understand that they're really going to walk away with something powerful. The algo is almost it really is when it really is. Like, the thing is, the time that I put the most effort into trying to get picked up by the algo was the hardware video, and it worked. So the problem that I have is trying to take the information that I want to get to you guys and making it so that the algo will like it. But that's why I think the approach that I've kind of taken is like, okay, here we're going to get to the capstone content. Once we're done with the capstone content, then we're going to go after the horde. Then we go for the front page, right? And then what will happen at that point is they'll come in from the front page and they'll see the capstone content, right? Another one that we might need to do is getting started in futures trading and redoing that video, because that one from originally is a little bit old. And I also don't like, one of the things is that YouTube keeps suggesting to me that should you take the Top Step Trader Combine video, which was like one of the first like real videos that I did. I mean, it gets the views and everything, but I don't feel like that one makes you want to go and watch the rest of my content on my channel. You know what I mean? Oh, no one will care about your head being cut off. Yeah, I don't know. To me, it was too big of a distraction. I was like, no, I can do better. We're going to do better. The first one, the audio was terrible. And that one, I was definitely like, man, if the audio was bad, it can hurt your video so much. So I was definitely going to fix that one. But I will find the time. I will find the time when we'll do it. Rosie O'Kelly, that's a new one. I watch a lot of videos about how to do it, but it's just, I don't know. Part of it is that I'm probably not putting enough effort into it. Like, I think that to really get good at doing this, I need to be working on doing that all the time and working on making content all the time. And as it is right now, I'm just like struggling to even just get one video out, you know? And so I'm not able to really put the care into it to think about all of those things that I wish I could. Well, the Treasury came back a little bit. We could have bought 615, but it looks to me like it's not going to give me a good enough opportunity for me to try and go long rates before the FOMC. So I'm going to get going. I will put in the title here, ISM surprises. ISM surprises. And, it's the 3rd of November. Did you tell me that earlier when I just didn't see it? Anyways, guys, thank you guys very much. Had fun chatting with you. We'll be back later for the FOMC meeting. So make sure you click that subscribe button and the bell icon so you don't miss that. I'll see you then. In the meantime, stay